Hello, everyone. Welcome back. Today, I'll be talking about debt, loans, margin, these big, scary words that I think we need to stop being scared of and understand. Regular people, investors, entrepreneurs understand debt well and they use it well. And I want regular people, people that don't tend to, look at things the same way. I want them to understand this instrument and understand how to use it and start using it. So today, basically, I'll be going over good debt, bad debt, and what's possible right now, especially coming up on these maybe tough times. So first thing, of course, our sponsors, right? So today's sponsor is again Retire Your Bills, retireyourbills.com. You can go to retireyourbills.com and start to learn how to use leverage by paying your bills, how to leverage the money that you use to pay your bills, pay them, and then use the leverage to invest, right? So using the same money you use to pay your bills to invest. So go to retireyourbills.com. We're ending the pre-sale next Friday, and then we're gonna launch the course for about 2 months, maybe three. We're gonna lock it, and we're just gonna work with those people that have got in before that time, and then we're gonna launch it again whenever it makes sense to do that again. So make sure you sign up. Retireyourbills.com. Second sponsor is MetaBronx, my startup accelerator nonprofit. That entity does two very interesting things that are very innovative. Most companies do not do this together. We're a startup accelerator where we help people that have great ideas raise funds to make those ideas possible. And then at the same time, we bring youth from our community in the Bronx to intern and have apprenticeships at those startups, paid apprenticeships. So kids in high school get to see startup founders that look just like them, and they get to see how they raise funds for their innovative ideas. And hopefully those young people will one day create the startups of the future. And then third, dot hip hop. So if you go to get.hiphop, you can buy your own hip hop domain name. And if you don't understand what domain names are, when you go to ESPN.com or retireyourbills.com, those are domain names. Those are the addresses of the web, right? And in the future, they will be the address of your money, of your business, of your ideas. So you want to own the domain names of your favorite terms. And since .hip hop is a new term that's available, and I am one of the .hip hop partners, I'm letting people know that you could buy whatever your name is .hip hop or your idea .hip hop before it's too late and somebody else owns it, and then you have to possibly buy it off of them. So those are our sponsors. So now let's get to the show. So today, right, we're going to start with bad debt. One of the big things that I think a lot of people fear the word debt and loans because in poor communities, what happens is that's the thing that ends up hurting us, right? We end up getting to the point where we, Eric, what's up? We get to the point where we use debt wrong because we're never really taught how to use debt, right? Debt used right is an incredible thing, right? So let's talk about bad debt, right? So let's talk about credit cards, borrowing money from people, borrowing money from banks when you don't have a way of turning that money that you just borrowed into more money. What happens in communities, poor communities, a lot of times is credit cards is one of the big ones that a lot of people use and don't do it right. They borrow money by swiping their credit card to buy something that they could not afford. So basically, they're using money from the future right now, right? So I don't have the money to buy these sneakers or this car or this home, whatever it is, right? I take that and I pay interest on it. So what tends to happen is you fill up your credit card with bad debt, and now you have a big amount to pay back, but those things that you purchased don't pay you anything. So now you have to make new money to pay off that debt plus the money you need to pay your day-to-day bills. So this is why I think most people fear debt, because they use debt in a way that is wrong. They're using debt, and I've done it myself. We all learn, right? I did it even as a business. I'm going to tell you a way I use debt bad and it didn't work out. And then I'll tell you ways that I use debt right and it did work out. And I think all need to really learn how to use debt, because debt is how things really happen. If you don't know that, like when I just said, Metabronx helps companies raise funds for their businesses. That is taking on debt for a business. So they take on this money. Now they owe it to somebody, but instead of owing it as a loan, they give them equity in their business. And that could be expensive, because if that business goes on to be a very good business and worth billions of dollars, that equity is worth a lot of money. So in a way, they're paying back that debt by giving that investor equity, right? So again, debt is everywhere. If you learn how to use it, it's a powerful thing to use. So let's just make sure we just understand the bad debts. So bad debt is when you borrow money for something that won't make you more money, or you don't think it has no way of making you more money. So, okay, I brought up the sneaker example, right? So if I borrowed $200 to buy the new Yeezys, now that debt is on my credit card and they're charging me probably on average 20% a year interest. So now I'm paying for those Yeezys. If I don't pay them off and I just pay the minimum, I'm paying like a lot more for those, and they don't make me no more money, right? So I got to make extra money now to pay off this plus the interest. Now, when you look at how countries use debt, right? So right now we're in this position where America, people are saying, America's too in debt. We can't do the things we want to do because we're too much in debt. When you look at what countries do what I'm saying is the opposite. They're not buying, liabilities. They're buying assets. They're creating things in their countries that hope to grow their economies. So this is where good debt is. And this is why banks exist, right? Banks, basically, you put your money in a bank, they lend out your money to people that think they can make more money with it. They don't just give you a loan so you can buy things that, can't pay the loan back. They want you to buy things that could pay the loan back. And that's what all that paperwork is for. They want to make sure that either the thing you're borrowing to pay this loan back, the thing you're going to do with this loan is going to be able to pay it back, or you have the assets to be able to pay it back, because they don't want to lose their money. And they created this instrument of home ownership to create more loans for the country, right? So if you want to buy this home, we understand you can't afford this home right now. It costs 400, 800 million, whatever dollars, and you do not have that right now. How about this? How about we lend you that money, give you an interest rate, so now you have that money now, and over the next 30 years, you pay us back and we make interest. That's their product as a bank. That's what they're doing. They're giving you something. It's not making you more money, but the idea is the bank, the value of that home will grow enough over time where it will be worth you doing that, right? And of course, you need a place to live. So it may or may not be cheaper for you to live in a home than to live in an apartment, and it's yours. So there's many pros and cons to every type of debt, right? So when you think about countries are taking on debt to fix the roads, to put in place things like the mail system, the internet, things that we all need. The government takes on debt to put them on because they need money to do it. And our tax money sometimes doesn't cover it. Most of the time won't cover it. So they need to borrow money from other countries in different ways and do a lot of programs. And what just happened was the country borrowed a lot of money. Basically, they created money. That's a whole nother thing. So they could also create new money. So during COVID, it was a shutdown. No businesses were operating. So they created a new set of money. They created half of the money of the entire history of Americans' money. They created it during COVID until now. So that means the value of our dollar just took a hit. And that's another thing. But that's another reason why you got to understand debt, because if you borrow something that's going down in value. So imagine I tell you, here, borrow this phone. I'm going to give you my new iPhone, whatever number it is right now. I don't even know. Let's say it's 14, 15. But I know in 3 years, iPhone 25 is going to come out and it's going to be the best thing since sliced bread. And I'm like, all right, borrow my iPhone. I'm going to give you $1,000. Let's say they're going to give me $1,000 to borrow my iPhone. I know that the value of that iPhone is going to go down. So it doesn't matter. I could keep that 1,000 and I could go and do whatever I want because the value of that's going to go down. So it doesn't matter. Right. So if I know the thing that I'm borrowing against is going to go up in value, then it is better. Right. Because as a person who's giving you the loan, I know the value of the thing I just gave you is going up. So that's what countries are doing. Countries are saying, look, America is saying, look, we're America. We're going to take this money. We're going to make America that much greater and our economy is going to grow. So the amount we're borrowing is going to pale in comparison to the amount we grew. So imagine America, let's just make the math, is making $100 trillion a year and they borrow 20 trillion and now America makes 150 trillion. Right. So now they borrow 20, but now they're making 150. Right. So this is what countries are doing. Sometimes it goes bad, though. Right. And countries are borrowing too much, but their country is not growing enough. So the value comes down. And that's when things get bad. And some people believe America is going through that right now, actually. So that's where, you got to kind of do your own research and think about what is happening. But at the end of this, I'm going to tell you what I see happening and how I'm thinking about it. And again, everybody needs to do their own research and no financial advice here, right? So how do investors use debt? Do you understand the reason the economy is bad right now is because America had to raise interest on loans, on debt, even on itself. So America raised interest. Well, not America, the Fed, which is not America, but whatever. The interest rate went up. So what happens is when the interest rate goes up, investors, entrepreneurs stop borrowing because it doesn't make sense to. And when they stop borrowing, the economy drops. Why is that? Because debt powers the economy. Because when entrepreneurs are looking to do new things, they take on debt to do it. And if entrepreneurs, investors are using it, countries are using it in the right way, and of course, sometimes it could go wrong, why wouldn't regular people do the same thing? So I'm going to talk to you about different ways that I've seen it work out well. And of course, there's ways that it works out bad, right? And I'll give you a pro and con of each scenario. So let's start out with investors. Here's what investors do. Investors, let's say I see a property and I'm like, all right, I could take out a loan on my home, right? So let's say I have a house already. I take out the loan to buy another property. That loan, let's say that loan is going to be $1,000 a month, but I know I can make $2,000 a month on that property. Is that good debt or bad debt? It's good debt, right? Because I just took out that loan. I owe 1,000. I'm going to make 2 every month. So I'm going to pay that 1,000 and I'm still going to stay with another 1,000. So that's good debt. And then the value of that home is growing. So not only am I paying off my loan, by the time the loan is paid off, that home is worth a lot more. The second one that I just bought. And then one day I could borrow off that one too. Right. So that's good debt, right? Like that's not buying the Yeezys. That's buying something that's going to bring you back money and grow in value. And once it's done, you can borrow off of it. That's amazing. Now let's talk about something that can go bad. I buy that same home. It's not renting. I thought it would, and it's not. So now what do? I have to adjust and I have to pay the loan back, like take a loss. And that's possible, right? You could have a bad decision with loans as well, for especially even with real estate. So there's an example I always tell people, like when I bought the property in the Dominican Republic, it wasn't everybody was saying, not everybody was saying that it was a good move. People were like, "Ooh, I wouldn't buy there. That's kind of crazy. Like you don't live nowhere near there. It's kind of far. Like what if things are happening?" But I knew because of the system that I was already operating within and the people I was working with, I knew that it made sense to do it. Most people were not. People were very like, "Oh, I wouldn't do that if I were you." So it definitely worked out. The property value doubled and I've been renting it all the time for years already, right? So that's but it could have gone bad, right? If I would have chose a bad location and it didn't rent, that could have been a problem. So that's good. That's a good and bad scenario within investing. Now let's look at entrepreneurs in a way that could be looked at as an entrepreneurial thing as well. But I'm going to take it towards companies, right? So there's multiple ways you could borrow money for your company, right? So you can borrow it from a bank and just have interest, or you can borrow it from investors and they take equity, right? Both have pros and cons. So on the bank side, to get a loan from a bank, you need to have things in place. Your business has to be doing a certain type of revenue, has to be alive for more than a few years, because they're not going to instantly give you money just because you just started this business. So you got to be around for a little bit with some track record of, paying bills and making money. And they want to see that you have money in your bank account often, because they're giving you this money. You definitely could run off with it, because what banks do is they lend you more money than they have. They create new money for people to do things, right? So this is, again, what America does, right? They print money, they borrow, right? They create this money so things can happen. So with entrepreneurs, I've done this. I'm going to tell you a wrong story I did. One time, actually, about 10 years ago now, I borrowed money because I was building this idea around augmented reality. And there was an SDK I needed, which means a technology. So a technology company will build the hard stuff to build stuff, and then they will let you rent it for a certain amount a year, so you can build on top of the stuff that they already built, right? So I rented this SDK because I was getting clients. I got Louis Vuitton, Chanel, IHOP, Nickelodeon to use this software, this new technology. So I was like, all right, I could create a startup with this too. I had got these clients, I made okay money from them, but I thought this was the future. I thought this was coming really fast. So I said, all right, I'm going to borrow this money from the bank. I already had a few years of existence. So I was able to. And then what happened was I wasn't able to sell that startup. That startup didn't make money fast enough. So that debt, I couldn't pay it because I was banking on the thing that I was building being able to pay off that debt. And I was banking on maybe getting more clients because I was already getting clients. So I would pay it off either way by the startup idea or the clients. Both did not happen. So that debt, I couldn't pay it, right? And as a business, it's different than personal. So there's a whole thing there. But still, that was a mess up, right? Like that was a business decision. I thought I could make more money from that debt, and I couldn't, right? Another thing that I've seen happen being a startup accelerator founder, let's say I have a great idea and I say, you know what? I think I'm going to need $1 million because this idea is going to take me a lot of money. I'm going to need to hire a lot of people. I got to take on debt because I don't have it. Again, debt is using money in the future. So I take on investors, right? And I've seen this happen. I take $1 million in from investors. I haven't raised $1 million. I've raised a few $100,000 from different ideas, but haven't done $1 million. But I have seen people do it, and I've advised people as they did it. So now I take $1 million. Sounds amazing, right? You see all the articles. Oh, X company raises $1 million, championship. No, that's just the start, right? You take the $1 million. Now you got to pay that money back in different ways. So how much percent of the company did you give up? I've seen startups give up too much money. So let's say too much equity in their business. So now let's say you raise $1 million, but you give up 20% of your company for that $1 million. That sounds not bad, right? It's like $1 million, 20%, not bad. The problem is, depending on the type of business you are creating, eventually you're going to need more and more money. The same way you needed that money right there, as you grow and grow and grow, you're going to need more money. So you're going to have to keep giving up 20% of your company. So if you give up 20% of your company 3 times, you no longer own the majority share of your company because you took on debt. And a lot of people see raising money as this good thing. It is good if you know what you're doing with it, because again, you could use it bad and then give up your whole company, and now you're working for other people. Because if you raise money 3 times and now you own 40% of your business, and that doesn't mean only one person owns 40%. You got founders, you got employees, you got all kind of things. You raise money one more time, and you may not even be wanting to do this business anymore. Because if you end up owning 10% of a business that you really thought was going to be a huge success, you may be demotivated to keep doing that business, right? If I think I'm only going to own 10% of this thing now, what's the point, right? Then that happens. Also, what happens is the investors can be like, you know what? I don't think you're running this company well. Since you no longer own most of it, we're going to take it from you, and we're going to put somebody else who we believe can run it better than you. And that happens. I've seen it happen multiple times because took on debt from a specific liability way, right? So when you take on debt in a certain way, things can happen. So again, there's pros and cons to debt. I just want to make sure we talk about all the good and bads of it, because I'm going to at the end talk about what I see as the huge opportunity, especially now, right? So, okay, we got entrepreneur debt. We talked about investor debt. Now, let's really go over good debt. Good debt is if I borrow $1, I can make more than $1, right? So I think if I can make more than $1, as long as that interest, I can make more than that dollar plus that interest, that's good debt, right? Because even if I borrow $1 and the interest is 10 cents and I can make $1.50, that was good debt because I made 40 cents. So why not do that? You do that all day. Again, certain people want to make 5 times, 10 times their money. But again, depending on what you're doing, it makes sense. When I talked about startup founders, the reason these investors give these people $1 million, right? Why would somebody give somebody $1 million? A risky idea, just started. It's because the way investment works is when you invest in things like the stock market. All right, I'm going to go over each one. When you invest in real estate grows about 3% a year. So it takes a while for your money to double and triple. But the reason it's a good investment is because it's very steady. You can get cash flow. You can borrow off of it. Now let's take stock. Stock tends to grow 8 to 12% a year, which what happens is when you invest in stock, your money doubles every 10 years. That's on average, right? So if you are an investor, you're thinking, okay, do I put my money in real estate? It's going to grow very slow, but maybe I could cash flow for it. Should I put it in stocks where it's going to double every 10 years? And I can borrow off my stock too, but the way you borrow off stock is very different. Stock is called margin loans. So when you borrow off a stock, you're taking a margin loan. And the way that works, normally, depending on the place you're going to do it, they're willing to give you 50% value of your stock portfolio. So if you have like a special brokerage account, depending on where you do it, they'll let you borrow based on the value of your brokerage account. So if you got 100 grand, they'll let you borrow 50. But if it goes over 50, like if the market drops a little bit and you get below that 50%, you get above that 50%, they'll take your entire account. Depending on how it works, they'll take all of your money and you lose it. So that's why a lot of people feel like it's dangerous, because they're like, whoa, I don't want to play with that because I could lose it all, being very, unsafe. So what I've seen people do, so good and bad, I've seen people say, okay, they're going to let me 50%. I'm going to borrow 25%. Why? So I got 100, I borrow 25,000, try to make more money, whether in stock or somewhere else, my business, or pay my bills, whatever it takes. Because rich people, that's how they pay their bills. I always say rich people borrow off their assets and they pay their bills, because when you borrow money, it's tax free. So you buy this asset, it grows in value, you borrow to live, you pay no taxes, right? So that's what rich people do. So if the market drops a little, you're still safe, because it has to drop 50% pretty much overnight for you to be in a position where they're going to take your stocks. So that means realistically, you could borrow about 25% safely of your stock portfolio. And then every 10 years, it'll possibly double on average. So that's good, right? You're like, all right, that sounds better than um, investing in only real estate, because only in real estate, it's not going to double every 10 years, probably double every 20 years, maybe more. And then it will also cash flow though. Some stocks cash flow, but most don't. Now let's go to crypto. And this is where it's such a crazy opportunity. I've been doing it. Crypto, just like stock, you can borrow off of it. You can take a margin loan off of your crypto in certain places in different ways. And again, do your own research. But the way I do it on a platform called Aave, AAVE. And what they do is they'll lend you 70% of your Bitcoin and 80% of your Ethereum. So again, that's a big amount difference. But it is more volatile, right? So Ethereum and Bitcoin, they jump a lot faster up and down than stocks do. So this is where people get scared. But this is where code comes in. And with crypto, I've already coded a bot that if the margin starts to get too close, it will protect the loan. It will just sell it. So I can sleep at night knowing that my margin is being watched by a robot, right? So again, not to say everybody has access to that right this second. I'm building it in a way that everybody will. But right now, you just have to keep, just like I said, if you take a loan of let's use Ethereum, let's use Bitcoin because it's 70%. Say you got 100,000, same idea. You borrow 70,000. That means if Bitcoin goes down, your margin will go above 70%. So they will take what I've seen happen. It actually happened to me early on learning this system. They took about 30% of my portfolio. Again, in stock, they tend to take more than 30, like 50, 100. I've heard. I've never done stock, but I've heard that's why a lot of people fear it, right? Again, the fear. I'm trying to go over the fear of debt. With crypto, they took about 30%. One time, because what happens in crypto is people are bidding against themselves to buy your debt. Because what happens is, let's say the margin is going to be called. People are like, I'll pay the debt for 20% on the dollar. Somebody else can say, I'll buy the debt for 15% of the dollar. Somebody else can say, I'll take 10%. And they whichever wins, they get the debt and they get the 10%, right? So that's why crypto decentralized finance is so interesting, because it allows for things like I'm talking about, where in margin on stocks, it's just the company. Whatever the company wants to do, there's nothing you could do. There's nothing on their end. They just make the rules. They charge fees. They do all kind of stuff. Everything has fees, but the fees are much higher on margin on stocks than crypto by a lot, right? So now this is what I've been telling people and what I've been training people on retireyourbills.com. Basically, what you can do, especially with Ethereum, because Ethereum's 80%, you can, let's say your bills are $1,000 a month. No, let's say your bills are $800 a month, and you can put in the $1,000. You can borrow the $8,000, pay your bills, and then you slowly start turning that $1,000 of original dollars. It's not in crypto. You start turning it slowly into Ethereum. By the time it gets close to the margin, you got another month coming in of bills. So you bring your money in again. So you bring in another 1,000. So now it lifts your margin. So this is what rich people do. So when you look at a rich real estate investor, what are they doing? First, what they did was, the first time they all start like this, they buy one home, one extra vacation or rental property. Now they're paying it. And as the value of it and the payment grows, they borrow off of it again. So they keep doing this, and they keep growing and growing their debt, but they're creating more and more value. So with crypto, it's just a different way of thinking about it. And yes, you don't want to go in too crazy. Like when I did it wrong. I invested, I borrowed like to the limit. every time the market grew, I borrowed even more because the market was growing and growing and growing. So I kept borrowing. And then when it fell, I couldn't pay it back fast enough because it happened in the middle of the night. That's why I coded this bot to watch, because I was like, how am I going to sleep at night knowing that that could happen? Because it happened to me. And I said, what if I make a bot that as soon as it sees a problem, it protects me in my sleep? And that's where a lot of this came from. Like that incident of losing money at night. And what happened was the market just dropped really quickly and came back up. So what did that mean? That person who bought my loan, bought my debt, they took my coins and then they grew right back up. So they basically took my coins at a discount and then they went back up and they made a lot of money. But they understood that system and I didn't when I was doing it. And I didn't understand most of what I was doing, but that's how you got to do it. Like, I think to me, it's all about learning. And once you learn it, it puts you in a better position. So like I learned about real estate investing. I learned about entrepreneur investing, did bad things, right? And wrong things, right? So I think we should not be fearing it. Once you understand it, use it to better yourself and better your situation. And yes, I'm not saying it's going to be easy, but with crypto, I've never seen it easier. So now let's go over each way you could do this in these other places. With real estate, you have to have a good job, good credit. You gotta really, the bank has to understand what you're gonna do with the money in a way and make sure that they feel comfortable with you being able to pay it back every month, because every month there's a value that you got to pay amount, right? So you're paying back that loan every month. You're late on the loan payment, it affects your credit, right? So now you can't borrow as much because your credit is being hit, right? So that's the way the real estate system works. On stock, it doesn't work like that in brokerages, at least, maybe in banks, but in brokerages, depending on what stock too you have, they don't do it on any stock. So let's say you have the right stock, you have the right brokerage, they're going to charge you to do this. So you could borrow the money, and then when you borrow the money, the amount is going to grow. On average, is going to be 8 to 12% a year. So it'll double your money every 10 years. But if in the middle of the day, because the stock market does close, if in the middle of the day, the market drops, they'll just take your entire thing. I've heard of times where they'll call you up like, hey, you got to put in money right now or your account's going to get closed. Again, I don't know. I've never done it, but I'm just hearing stories and then talking to different people. So in a bank, very unlikely that they'll give you a loan. I have a friend who has Apple stock. He was able to borrow 20% of his Apple stock. But again, Apple stock is going to grow a certain amount a year. So it's not going to grow as fast as crypto, in my opinion. Again, do your own advice. Do your own research, not financial advice. So this is where I think crypto goes into the way the countries use debt. And this is why I say, if countries are using debt in a way to grow their economies and grow their value, and now we can too, at a probably a higher clip than even countries could do, why not, right? So okay, so how I do it, I bring in the money for the debt, right? So I know I got to pay X amount a month in bills. So I bring in more than that. And the sweet spot I found is 10 to 25% more. So again, if you have, let's say, $750 in bills, if you could bring in 1,000, now you borrow the 750, pay the debt, pay the bill. Now you still got $1,000 that you could turn into Ethereum and Bitcoin all month, buying every day. And then as they go up and down in value, you're just continuing to bring more. But now what you're doing is you're investing average 70% of the money you're using to pay your bills every month. So now imagine doing that for years and years and years. Also, crypto tends to grow on average since its birth, since its history, 100% a year. It's not going to happen every year. There's up years, there's down years, but on average, if you keep doing it and you looked at it since the start, 100% a year. And that's Bitcoin. Ethereum is actually higher, way higher. So And I think most of the world still has no clue about anything I'm telling you right now. So once most of the world understands what's possible, people like me make it easier by technology and user experience, the whole world's going to do this. I think, again, I think, and I'm betting hard that they are, because where else can you do this? Have you ever heard of a way to leverage the money you're going to use to pay your bills, still pay them, and be able to invest? I've never seen it. I've never seen it. I've seen things where it's like it'll invest whatever's left. So like I just said, if you have 1,000, your bills are 750, it will invest part of the 250 for you, right? But again, investing 250 versus 700 every month, it's a big difference. That means you get to a point where you don't have to work anymore 3 times faster, right? So again, if it's going to take you 30, 40 years to retire, if you can get there 3 times faster, would you not want to even try it? And what's the real risk? You lose the money that you used to pay your bill already, right? So that's, again, like, it's a low risk, high reward, at least from my opinion. Again, I want to hear anybody's thoughts on this, because I know the debt thing becomes an issue. A lot of people are like, yeah, but why not do it without borrowing? And I always have this conversation with customers and people I coach. Yeah, but would you, like, even Apple just now, richest company in the world, they just borrowed billions of dollars. Why do you think they do that? They don't use the money that they have. They have money, but they know what they're about to create with that money is going to make more money. So why would you spend the money you already have when you could just borrow money and make more money off borrowed money and keep your original money? Use the money twice. And that's where I'm saying, wow, I know most people feel like they can't invest because they can't afford it, but they're paying bills, right? Like, you're paying bills, and maybe you don't do with all your bills. I've told people, all right, start with one bill: Netflix, cell phone, internet. One person I had start with their school loan. Then they eventually graduate and keep growing and growing the amount of bills they have in there, and the amount they're investing is a lot higher every month. So this is where I don't see a reason not to try it. I do think that it is a little technical right now because it is very early. This is like in the 90s trying to get on websites without, Chrome. And that's where people are starting to build the Chromes so you can get on the websites. Just starting though, right? And that's where the opportunity is, because once there is a Chrome that everybody can just easily go online and do what I'm talking about, don't you think more people are going to do it? I remember being early to this internet thing, and I'm making websites and knowing that this is just the beginning. Just the beginning. People are making websites and there's very little traffic coming to them. But when the whole world is able to get internet and get these browsers, the amount of traffic that's going to come to these places now, and you're seeing it now with these social media apps and everything, like, things can get to 1 billion people instantly. And guess what? Most of the world still doesn't even have access to internet, phones. There's still, I think, half of the population of the world does not have phones yet. When they have phones and they have access to everything I'm talking about, internet, but then this decentralized finance thing, where else do you believe they're going to put their money? If you're in a poor country and you never in your whole history, your family's history, were able to get a loan on anything, and you understand this concept, because there's a big thing about education. You have to understand this and not be fearful of it. What is your other option? Banks is never going to give you a loan. They'll never give you a loan. But with decentralized finance, they're lending you money against the money you already have. So it doesn't risk. There's no risk to them. With banks, they got to do all kind of paperwork. It doesn't make financial sense for them to give you a $75 loan on $100. But in decentralized finance world, it happens all day, every day already. And we're talking about not even 1% of the population is doing this yet. Imagine when just 10% of the population is doing it, all these coins values should grow. And again, not financial advice, but I do see a humongous opportunity with all of this. And I really want to help as many people as possible take advantage of it, especially right now, because the prices, they're down a lot. And even in this past week, they've gone up very quickly. But I actually believe, and again, not financial advice, I believe this is a pump that's kind of meant to entice people to get in, and then they're going to pull the rug again. So another big thing I tell people is with real estate, you don't buy real estate expecting to sell it in under 5 years. They tell you, if you're going to buy real estate and sell it in under 5 years, you're more likely to lose money than make money. People understand that. People do it every day. Stock, very similar. You're going to buy stock and you expect to hold it for less than a year, you're probably going to lose money. There's even a law with stock that if you hold it for more than a year, you will pay less tax, because they're trying to incentivize people to not sell in under a year and most likely lose money. They want you to say, I'm going to buy this and hold it for at least a year. With crypto, people view it very different. People view it as gambling. And this is where I keep seeing the gambling apps. Like I see them every Sunday, you watch football and stuff like that. It's all the ads are gambling. There's a lot of Americans gambling, and probably people around the world actually. But when they think about investing, a lot of people are like, yeah, but that's a gamble. And I'm like, all right, so let's compare the gambles. Even Lotto, you have, oh my God, I can't even imagine the actual amount of percent you have to win the Lotto. It's like you have more of a chance of going to space and back 3 times than win the Lotto. But people play it. People will put $100, $50, because I believe what happens with Lotto and gambling is people say, I'm okay with losing this money. But when I invest, I'm not okay with losing that money. Right? So they'll put money into gambling, cool with losing it. When they lose it, most times they lose it, they're like, all right, I expected to lose that. When they invest and they think it's going to go up and it doesn't, they're like, oh, you see, that's a scam. But gambling is not a scam, right? It's like, how do you connect that? Because gambling is the scam. Like, there's 0% chance that over investing in an idea that has a possibility of growing, that you have a chance of actually helping to grow. Like, all right, for instance, right now, me talking about Aave, me talking about Bitcoin, me talking about Ethereum, I'm giving Ethereum, Bitcoin, and Aave a chance of growing in value, because now you may go and look at it. You may go buy it. Millions of people may one day, not just because of me, because of other people, buy it and it will grow in value. There's nothing I could do that will help that running back get into the end zone and win the game for your team, right? There's nothing I can do for that random number to hit for Lotto. But people are okay with that, and they're fine with that, but they're not okay with this gamble. And that's where I'm like, what has to happen for people to treat investing? If you're gambling anyway, why not invest? And to be honest, my system, I was even thinking, let's say you're going to gamble $100. What about put 125 into this system, borrow the 100, gamble it? You're more likely to lose it than not. It's just like a bill. The money's gone. But at least you got this 125 here now, that let's say you're able to invest even half of it in Bitcoin and Ethereum. So now you've invested let's say $60 in Bitcoin and Ethereum. And in 5 years, Bitcoin and Ethereum 2-3x's. Now that 125 that used to be 125, you turned it into 60 of Ethereum and Bitcoin. It tripled. So now it's 180 plus the extra 70 that you had left. That's 250. And you have a $100 loan. That's what's possible. You lost that money anyway, just like you lost it paying the bill. Why not do this system? You have almost no reason to. So you may lose that $25 if you don't catch your loan, if the market drops and you're not watching it. Yes. But you lost that $100 anyway, right? So why not invest the extra 25 to possibly make, and that's just in a few years. If it's 2-3x in a few years, you think about it more long term. I just told you your money doubles every year. I mean, every 10 years if you invest it in the stock market. With crypto, on average, it doubles every year. On average, of course, there's years that it goes down, there's years that it goes up a lot, ups and downs. But again, if you take the long-term average, it's pretty good. It's much higher than stock, much higher than real estate. And you're able to play with the leverage in a way that those other two, you can't. So this is where, why not learn? Why not try it? Because of fear of debt, the word debt and loan, that's what's going to stop you from possibly creating your financial freedom. That to me is unacceptable. I think you, and again, I've had kids at Metabronx start this with $5. You don't even need $100. You could do this with $1. Sometimes when I'm showing people in our community, I do it with $1. I say, okay, let's say your bills are $10,000. I put $10. All right, now, well, let's say you're about to buy something for $8,000 or $7,000. I'll put $10. I'll borrow 7 or 8, so you can see, or is it just different zeros? And you'll see what happens. It's the same percentage of margin and all that from 10 to 1,000. It's just a few less zeros. So you can see, you can try this with less than even your bills. You can say, all right, my bills right now are whatever. Let me try it in dollars and see what it will become. That's what I have my bot doing right now, where I'm testing the bot, every day and making sure there's no problems before, of course, I launch it to the public. And I'm testing it with values that make sense to a person that is doing this with their bills. But I'm doing it in dollars. I'm not going to do it with tens of thousands. It doesn't make sense to do that. On other accounts, I do it with my real bills, because I've been doing this for almost 2 years now. I think in May of this year will be officially 2 years. Because I started in February playing around, learning, and then around May, Polygon came out, Aave came out on Polygon, which lowered the gas fee. That was key to what I was trying to figure out, because this was not possible with Ethereum, because the Ethereum gas fee was so expensive that to do a loan on $100, it would be like $50 just the gas fee. So I was like, nobody's going to do this. But once Polygon came out and the transaction fee was like a penny or less, then it made sense to borrow $100 and pay a penny versus borrow $100 and pay $50. So that really all started, I think, around May of 2021. But again, I've been looking at this every day for 2 years, trying to figure out how regular people can take advantage of it. And if you want to be one of my community members, again, we're gonna close it up next Friday, and we're gonna teach people how to start retiring their bills by doing just this. And please, if you have any questions about what I said, or any feedback, good or bad, I want to make sure I'm not missing something. And I understand this is a complicated subject, and loans, scary, whatever, but this is what businesses do, investors do, countries do. You should be able to do it too. That's all I'm saying. And you can. Right now, you definitely can. So if you're not doing it, it's out of fear, and that's all. That's all. It's literally a few steps. And I have a free training at retirebills.com that shows you literally the steps, links you to everything. So it's like, why not just try it? What's the worst that can happen? You lose. Let's say you started with a bill like $100, you lose $20. Even try with Netflix. I have a calculation with Netflix. Netflix is a $15-$20 bill. You put an extra $5. What's the risk, right? So, and that $20 every month could turn into a lot more money. So this is where, again, this is what everybody else does. All the other rich people doing it. Why not you? Thank you for your time. Hopefully you have a good weekend. retireyourbills.com.